Welcome back to this video. In today's video, we are going to explain about CAMS India, Airtel and IDFC Bank. There are few news about these stocks, and before that, please make sure that you subscribe to the YouTube channel. So if you see here, the Warburg set to sell stake in Bharti Airtel IDFC First Bank after CAMS exit this week. So what was wrong with these all companies? First thing I want to share that is there any problem with the fundamentals of these three? Let us check that, right? CAMS India. In CAMS India, I already told you, right? Go and check yesterday's video. I will be pinning in the comments or in the I button. Please go and check the video. So I will be discussing about Bharti Airtel and also the IDFC First Bank. Let us go and check it. So if you see the IDFC First Bank, is there any is there any wrong with the fundamentals? If you see, the profit is keep on increasing and the profit and loss statement also keep on increasing. It has doubled in the few years. So what's wrong? The financials are good enough, as the fundamentals are very great in IDFC First Bank and all are good. But what happened to this company to sell the stake in IDFC First Bank and Bharti Airtel? First, I want to make sure that these companies has a certain target. For example, if my target is, for CAMS India, my target is 40%. After reaching 40%, I will be selling it. Right? Is there any opportunity to grow? Yes, there is an opportunity to grow in CAMS India, but why these people are selling? See, they had a certain target. In next 1 year, this will be our range. So it may be 30%, it may be 20%. So after reaching the range, these companies will sell their stake. If I am buying a company, for example, I bought Amazon and I am keeping it. My target is all-time high. After reaching the all-time high, I will be selling stake in the Amazon. Same with the CAMS India. My target is the all-time high, and if it reaches all-time high, then I will be selling it. So is there any off with with these companies? Certainly not, because people already know that these are the great companies, the futuristic companies, and IDFC First Bank, CAMS India, or in a very good growing sectors, and Bharti Airtel also, a kind of duopoly game with Jio and Bharti Airtel. So is there any wrong with our company? Of course there is. There is no wrong with the company fundamentals or any profit and loss, but why they had reached their target, they want this amount of money to gain and they sell their stake. That's it. And there is not anything wrong with the company. And if you want to buy IDFC Bank as of now, let's see, is there any possibility to buy? See, the profit before tax has keep on increasing, right? So if you see the market capitalization of IDFC Bank, it is somewhere around 71,000 crores. And if you see HDFC Bank, which is the largest bank, it has 12,37,589 crores of market capitalization. So how much difference is IDFC? Right, there is 10 times of different. If you want to generate the profit, if you are not a trader, if you are a investor, to keep this stock for next 4 to 5 years, it may turn into the multi-bagger stock. So IDFC is a multi-bagger. If you want to buy now as a trader, it's not the right thing. If you want to make money in the next 6 months or next 12 months, it's not the time to take decision to buy this stock. So please consider what is there will be always a technical target for it, right? So if you are an investor, right, if you are an investor, let's go to the IDFC Bank, right? So if you see here also, there are certain phases. Okay, so there are 2-3 phases. For as of now, there is no support level for this IDFC First Bank. So there is a formation of certain support level. If you see here, this is a support level that was forming as of now, but certainly there is no support level. But if you see here, this is a resistance for a long period of time. It is a resistance. So when it breaks, it majorly becomes the support level for any stock. So as of now, I was thinking that 69.95 is a support level, but there is no support level as of now. If the stocks comes down to 69 or somewhere around 70, then it will be becoming value buy as of now. If you are a trader, then 69 to 70 is a recommended buying level, but this is not recommending. I was saying my opinion. So if it falls to 69.95, then I'm going to buy it. So why? Because there is no support level as of now. From its all-time high, if you check here, from the all-time high, it was fallen more than 12%, but if you check here, it has fallen more than 20%. So my my level is that if you're a trader, just wait for 30% of fall. So if you're a trader, you just see the stock, is it going to be undervalued? As of now, it is not undervalued, it is not even overvalued also. So it may become not a value buying. If you are a value term investor, it is not value for investing as of now if you are a trader. But if you are an investor, just look into the perspective. So the market capitalization is 10 times lesser than the HDFC Bank, right? So if you see HDFC Bank with 12 lakh crores of market capitalization, and if you see the IDFC First Bank with 61,000, somewhere around 61,000 market capitalization, it is 10 times to 20 times lesser than that, right? So if you all see the prospect, it may become 10 times even bigger, right? If it may become 10 to 20 times bigger from now. When the GDP per capita of India increases, these banking sector will increase mainly. So the finance sector will increase. So if you see what is GDP per capita income, the average spending, right? So it is basically the average spending of a person. So that's where you calculate the GDP per capita. So if the consumer is spending more, it is not like they had a lot of money. They may taking the loan, or they may taking the credit from the other credit cards, or maybe from the banks, or maybe from anything. They're borrowing the money and spending. That is also the case. So GDP per capita is not always like income proof for a country. It is same like spending of money. So spending of money will not be considered as income statement. So remember that's a all separate topic, but as of now I want to say it, so I'm saying it. So as of now, if you see the IDFC First Bank mainly focuses on the credit cards, right? So mainly focuses on the credit cards, but because of interest rates, it has decreased. But when the interest rates cut down, these banking sector will rally soon, right? Maybe it is HDFC Bank, maybe it is Kotak, maybe it is IDFC. But before that, IDFC already gave a lot of freedom, right? IDFC gave a lot of freedom, and it is a private bank, gave a lot of return. So if you are an investor, if you are looking for next 5 to 10 years, it may become 10 times. It may become 10 times for the next 10 years. I'm saying, please listen these words, for the next 10 years. If something go wrong, just take your money and get out from the stock. If everything goes as usual, if everything goes on your perspective, then maybe it's a value buying for you. So please please don't go with the perspective that this is a value investing. It is value investing when the stock is at 50 or 40 or 38, even 38. So this is where the value investing happens. But the stock made the rally, the PE ratio is somewhere around 22% or 24%, and as of now it is not a value buy. If you are an investor, then maybe you can take a chance of investing, but my perspective is that this is not right time to get into the stock. If you are not a investor, it is not a right time. If you are an investor, please make sure that company runs according to the norms and rules of RBI, and it is not making any mistakes, and there is no problem with the IDFC First Bank, and then you keep your money, and that will be 10 times or 15 times in the coming years. It is only my perspective. This is not any investment advice. I'm saying how the banking sector will improve. So see the market capitalization of top bank and see the market capitalization of this bank. So what is the difference between the both? HDFC Bank is a higher bank. It give loans to the commercial sector, and see the loans market share also. Will it giving to commercials or retail public or whatever it is giving? And check the IDFC First Bank. If you seeing something different in two different banks, then you should be worrying about it. As of now, there is no worrying. There is a news article about this. The Warburg was selling the stake in Bharti Airtel and IDFC Bank. I'm not taking this into the consideration, because it has sold the CAMS, and if you see the CAMS gave a good run up as of now. If you see the Bharti Airtel have, these companies has a certain target for every year. So if you invest in this stock, this will be their target. So if it reaches, they will sell the stake. That's their motive. And I'm saying in this video, I said in the yesterday's video, so there is no problem with the company. Their fundamentals are good. Their technical patterns are very good. If you see the technical patterns also, it is a head and shoulder. And if you're targeting, then I can say that 283 rupees is it should be your target for the next 3 years. And please note that this is not any recommendation. I was saying my perspective and how you should approach the stocks. And if you see, if you see all these news says that these people are selling these, yes, they may sell, they find the opportunity in other companies. There are a lot of opportunities in other companies which are undervalued companies. This is not at all undervalued as of now, so they take out the money and keep in that stock or on that company if they see the fundamentals. That's it. So that's their motive and their target has reached. That's why they sell their stake. If you find this video helpful, please make sure that you subscribe to this YouTube channel, and please like, comment and share the video with your friends. Thank you guys.